What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Recently, I released a video where I talked about why the home that you live in is not an investment. And if you haven't seen it yet, I'll link it in the description below. But after watching that, you might be thinking, so how can I actually invest in real estate, Jaspreet? So in this video, I'm gonna go over 5 ways you can start investing in real estate even if you don't have the money to go out and buy a property. And before we get into it, make sure you hit that thumbs up button below. The first way you can invest in real estate is by investing in REITs. A REIT is a real estate investment trust. And that's just a fancy way of saying that a REIT is a company that owns and invests in real estate. When you invest in a REIT, you don't own the physical real estate itself, you own shares in the company that owns the real estate. So theoretically, if real estate values rise, so should the value of your REIT. But the power of REITs goes way beyond that. The thing that makes REITs so special is that they are required to, by law, follow the 90% rule, which says that they have to pay out 90% of their taxable income to shareholders through dividends. That means if you're looking for passive income, a REIT is a great place to start because they are required to pay back most of their profit, which comes through things like real estate rental income, back to their owners through dividends, and you don't have to do any of the work. To give you an example of what I mean, CP Executive did a study and they found that the average dividend for a healthcare REIT, which is a REIT that invests in senior housing, hospitals, and other healthcare buildings, their average dividend in 2018 was 6.1% over the year, and that doesn't factor in any appreciation. You can compare that to your bank savings account. Are you guaranteed to make money when you invest? No, you might even lose money. But this is why it's so important for you to do your due diligence. The way you invest in REITs is the same way you invest in stocks. You have to open up a stock brokerage and then you figure out which REIT you want to invest in and then you fund the trade. I'll link a video which explains how to invest in stocks in the description below if you're interested. The second way you can invest in real estate is by becoming a partial equity owner. You can think of this kind of like the Shark Tank version of real estate. No, you're not gonna go door to door saying, "You're dead to me," to owners that don't sell you their property, but you can be a partial owner in a real estate deal. Like, let's say you find a $100,000 property that you want to invest in, but you don't have the money to buy this property yourself. So you can go out and find other people who have money that want to invest in this deal, and you can put it together and then you can keep a percentage of equity in this property. You can also negotiate some ownership for putting in the work to find the property and renovate the property and manage the property properly, but having some skin in the game always helps. Just remember, anytime you invest in real estate, you should always have an attorney on your side, so make sure you speak to an attorney in your area before you do this. The third way you can invest in real estate is through real estate crowdfunding. The way real estate crowdfunding works is you invest a small amount of money and then your money is pooled together with a whole bunch of investors, and then this money is used to go out and buy real estate and you get your share of the profits. One thing to remember with crowdfunding is that you're not usually getting actual ownership in the property, you're just getting your share of the appreciation and your share of the rental income minus expenses. But that's not too bad because you don't have to do any of the work. One example of a real estate crowdfunding platform that I have actually invested with is called Fundrise, and you can start investing with Fundrise with as little as $500. The cool thing about Fundrise is that they have this online portal so you can track the value of your investments and you get paid quarterly dividends as well. And because I have invested my own money in Fundrise, I'm happy to share my returns with you. This way you can see if Fundrise is a good investment for you or not. So I'm currently getting about a 4% annual dividend from rent, which is okay. I made my first Fundrise investment in early 2018 and my 2018 return was 7.3%. So that's a 7.3% for just less than a year. This is an actual, I'm gonna put up a screenshot from my portfolio, and to date in 2019, so a year and a few months, I'm up just over 9.2%, which includes dividends and appreciation, which is pretty good. Again, I can't make any guarantees as to what type of returns you're gonna see. This is real estate. All properties are different and the market is always changing. So you might make more, you might make less. But if you want to learn more about Fundrise and how it works, or you want to see the historical returns, I'll put the links to where you can learn more and get started in the description below. And as full disclosure, Minority Mindset is an affiliate partner with Fundrise. So if you open an account and start investing, we will make a small commission, but there is no additional cost to you. So if you want to learn more, the link is in the description below. The fourth way you can get started in real estate is by turning your house into an investment property. If you own your house right now and you're thinking of moving, instead of selling your house, you could rent it out and turn this property into an income producing property. The cool thing about this is that you get to capitalize on a lower interest rate debt because business loans are more expensive and come with higher interest rates than personal loans. So your debt payment is lower, but you get the same income as if you bought this property as an investment. And now you can create a new stream of income because you have rent coming in from this property, and this rent should ideally cover your mortgage, your expenses, and put some money in your pocket. And one quick point on this. You usually have to live in your home for at least 1 year and 1 day before you can turn it into a rental without any problems. So make sure you speak to an attorney before you do this to make sure you're not running into any issues. And the fifth way you can invest in real estate is by buying real estate creatively. I don't need to tell you that you can go out and buy a property with cash or get a loan from the bank to buy a property. Everybody knows that. So let me talk about creative financing. If you want to buy a property and you don't want to go to the bank to get the money to buy it, or you can't go to the bank to get the money to buy it, you can ask the seller of the property to give you the money so you can buy their property. This type of seller financing is usually called a land contract, and you have way more negotiating room on the terms of a land contract than you do with negotiating a mortgage or a loan with the bank. Like, I've seen deals where buyers didn't have to make any payments to the seller for 6 months. This way they had time to come in to renovate the property and start generating some income before they had to make a single payment. It's all negotiable, but it is still debt. So if you don't make your payments, the seller can come in and they can foreclose on the property, so you have to be smart. Thank you for watching. If you enjoyed our video, hit that thumbs up button and share it with one friend so we can help spread the word. Don't miss our new videos on entrepreneurship, business, and money every Wednesday and Friday at 7:30 a.m. Eastern Standard Time. So hit the subscribe button and the notification bell below. That way you actually find out when the new videos are released. And as always, keep hustling.